Do you read me?
Be advised, you are coming in weak and unreadable.
Say again, Com Tower. This is Pacho. Do you read me?
Pacho, this is Com Tower. I read you Lima Charlie.
Com Tower. Request permission to launch and commence the field op. Over.
Stand by. Pacho, permission granted. I say again, permission granted.
Roger that. Launching podcast in 3, 2. You are now entering the field op with your host, Pacho Correa, Chief Warrant Officer 3, United States Marine Corps retired. Get some. Hurrah! Get some. Hurrah! What's going on, everybody? Another weekend is almost upon us. Friday Night's Eve, baby Friday, but goddamn, it's almost the weekend. Hey, I got an amazing show for you. One is that is very near and dear to my heart, and that I just have a lot of passion for it. It's something that I do pretty much helping folks out in the not only in the private sector, but also military retirees, as well as veterans, brothers and sisters of our own. So let's get all the pleasantries out of the way today, and let's just let's start talking about it, and then we'll jump on our topic. So, hey, this show is brought to you by me. So, and what is it I do every day aside from being amazing and having an amazing accent and talking to you all over here? Well, I work with professionals and their families, as well as military service members, transitioning service members, and veterans. Basically, increase their income, increase their monies, make it grow, as well as reduce their tax liabilities in the sense putting some products together. So, and protecting what you currently have. So if you're open, a little bit curious, you want to find out more, how is that you can increase your income as well as grow your wealth and protect what you have, let's have a brief 25-minute conversation. We can talk about how if I can be if of any service, if anything, and if not, at least you have the information so that when you are ready to make that transition, you'll think of me first. All right, sound fair? The other thing that is I also help veterans as well is putting the strategies together in regards to their VA claims and benefits. Now, I can't guarantee that you will get 100%. However, I have helped veterans and they've gone from 20 to 50%. Some have gone from 40 to 70. Some have gone from 70 to 100. So it all depends on your case and what is it and the complexity of what is that you have and how we can maximize it. So if you want assistance with that, hit me up. I do that Tuesdays and Thursdays. Just shoot me a DM right here on the comments, or you can find me also on TikTok, LinkedIn, Instagram, Facebook, all that good stuff. Shoot me the info and let's have a conversation. Because at the end of the day, these are your benefits. Don't wait 20 plus years like I know some veterans have, and I get it. I appreciate the fact that you guys say, hey, I only did 4 years. I didn't deploy. I don't earn it, whatever. But you gave your heart, body, mind, soul, and spirit to this big green machine of ours. And the government took their pound of flesh out of you and then some. You do rate these benefits, is what I'm trying to say in the long run. So hit me up. Let's have a conversation. If your case is too complex and I can't help you, I can definitely point you in the right direction where you don't have to pay out of pocket or give up a certain percentage for a certain amount of time frame to those other folks out there. So if that makes sense, hit me up. Let's have that conversation. And look, the other thing is that if you want to get into the podcasting game, if you want to get into the podcasting game, hit me up. I can point you in the right direction. Huge shout out to Brian Colburn and his team at SageRadio.com. He's the reason why I'm here sharing this information with you. So hit him up. He can also help you in many different aspects. So I keep edifying him, and I keep saying, and last but not least, hey, look, this show is all about supporting the Constitution and the amazing freedoms that that amazing document has brought, brings us as American citizens. So if you like the show, like, subscribe, and follow me in my other venues: TikTok, Instagram, Facebook, and LinkedIn as well. And support your local podcaster, because look, at the end of the day, freedom of speech, the right to bear arms, and all the other freedoms that we get through the Constitution we can't let those go away. We cannot jeopardize them. And if you don't like what I'm saying, that's okay. Hey, we can agree to disagree, and check situated.com, and there's plenty of other things in there that you can check out. Right. So that's pretty much it. And here's the topic that we're going to talk about today. So there's been a lot of, you can tell that I'm telling you, these phones are listening to us. If you don't think so, then you're pretty naive. But I mean, we can't live nowadays. You need one of these instruments right here to pretty much do anything. I mean, even an iPad or a device. So, but these things are listening. So I am in the finance industry. Part of doing finance is life insurance, because that is part of that whole strategy. We only promote term life, and I'll get to the main topic. So, and obviously, I meet with a lot of professionals. I help the families, and I have a lot of colleagues as well. So, but there's been this massive. I've been noticing on my feed. There's this massive push on social media for indexed life insurance or IUL policies. The other ones that are lumped up in that category are whole life, universal life is another one. So whatever. Regardless of what the sexy name may be. What's up, Angel? Ara, get some. Thanks for always supporting the show. So there's this massive push on social media on IUL policies, especially targeting service members, veterans. Here's the other one I saw the other day for truckers. Hey, you're always on the road. Protect your family. And it had a cool picture of this big ass truck and stuff. But the pitch sounds slick. It's tax-free retirement. Be your own bank. That's the other one. Market upside with no downside. This is what the wealthy use. Oh man, that's my favorite. So first, insurance and investing are not the same thing. There's no such animal. All right, just like there isn't. A corpsman just can't go out there with their gun, or a medic, because again they're actually protected. And they cannot. That's why, or a chaplain. I'm sorry, the RP of a chaplain, they can't carry a weapon because technically, that's what the RP does, but the chaplain can't, or a medic, or those things, because they're actually protected through the Geneva Convention, because they're non-combatant. So it'll be the same thing, right? So that animal doesn't exist. So when someone blends the two and they sell it as a wealth shortcut, that's where you need to pay attention. Whole life has been around. Actually, here's a historical fact. Whole life has been around since the 1800s, believe it or not. Universal life since the late 1970s. So, or index universal life showed up in the 1990s. So, when you hear this is what the Rockefellers used, blah blah blah, whatever, they're full of it. Okay, this isn't anything new. It's not a secret. It isn't revolutionary, okay? IUL is a permanent life insurance that credits the interest based on a market index. What does that mean? Is that it's a product that is designed, and you throw your money. Well, part of it pays your insurance. The other part pays for the premium on that policy, okay? And then that money that's supposedly going into a savings account or investment account has to be put in an account that tracks an index. Everybody knows the S&P 500. There's other called the Russell 2000, so on and so forth, right? But the thing is that it has caps. In other words, it has a ceiling, and it just can't go past that, right? It also has participation rates, and it has internal. So all these things have all kinds of internal costs in there, right? And it also has surrender charges or schedules. So if you decide, like, hey, you know what, this isn't for me, I'm plugging from the matrix, I took the blue pill, I don't, you know what I'm saying? Now you're on the hook for payments because you were supposed to be on this thing for a long time. And that's where a lot of people get upset. And by the way, disclaimer, I myself was part of this. So you're investing in the contract as well. So let me just kind of settle my notes, because I'm getting super excited. My accent is coming out. So social media. So think about it like this. when you're on social media nowadays, which everybody has a phone, everybody has a device, all these things, right? You're a junior enlisted service member. You're getting ready to separate out of the service after 4 years, and you're like, oh, what am I going to do? Or, you're just somebody that's trying to, middle income person, and you're just trying to do the right thing and protect your family, right? So when you start hearing tax free, rich people use this, be your own bank, all these crazy things. And here's my favorite part, or the crazy part, because I do get into a lot of Facebook fights, Instagram arguments, and or on LinkedIn as well. Well, I wouldn't say arguments. I just get into some very deep discussions when I see somebody, hey, service members, hey, get this because this is the best thing since a slice of pizza and blah blah blah, and it's amazing, and they'll have this long ass post with details and inflations and how why you should get this, and I'm telling you, folks. I mean, I'm making an entire podcast out of this, but the answer is very, very simple, and I will give you that answer at the end of the show, right? So what how do they sell these things? And by the way, you can also look up Kyle Busch, famous NASCAR driver. He was cheated out of $8 million. He funded this thing thinking that this was going to grow and everything else, but this is where now I'm not saying that the folks that sell IULs or whole life or universal life they're all bad people. No, there's some that really believe in their product, and they try to do what they think it's best for their clients with these products, right? And I know, and then there's others that they're out there for the commissions, because these products they can be very lucrative for the agency and the rep that sells these products. Okay. So, and they like to use certain things like, oh, the war in Ukraine, look how horrible the market did. Uh, the war, the conflict in Israel, I'm using current events, but they love 2008 when the market heavily dipped. And by the way, it was not a crash. The last time the market crashed was in 1928. Okay. Yes, a lot of things happened so that that the market heavily fluctuated during that and took a dip during that period. 100%, it did. People were writing really bad housing loans. The rates were super, super low, and people were just excuse me, churning and burning, who are in the industry. I have a lot of friends who are realtors, mortgage brokers, and they made a lot of money, and they also lost a lot of money because of what was going on at that time. So it was just the perfect storm for all that to happen, right? But these people, they love to use those time period. They also, COVID was another one, and so you got 2008, you got all these periods of volatility in the market. And by the way, the market kind of does this between, I don't know, 6-7 years. It tends to fluctuate like that, heavily like that. So I like to point out COVID time frame, right? So yes, COVID, the market at the beginning of COVID in February, March timeframe, the market took a dip, and then the following month the market recovered. 2008, yes, the market took a huge dip, and then by the next year it started rising up and it recovered. So the market fluctuates. The smart investor goes and says, "Hey, everything is everything is for sale," right? So, and they start buying. The investor who hasn't met with somebody like me, hasn't had a coach that will tell him, "Hey, don't worry, calm down, things are going to be okay. The sky is not falling." And then I show him. I have a nice little graph, and it has all the timelines with all the crazy periodic periods that people think, oh no, the sky's gonna fall, and all these things, right? So they use these things, Wall Street, that you're gonna lose your money and everything else. And I'll get to that part right here in just a second. And desire for guaranteed growth. That's my favorite one, and it could go up to. It's not. If again, I worked with, when I was in the safety industry, and OSHA language or legal language goes shall and must. Nowhere in there to say it shall go up to and it must go and it's guaranteed. Nope, they're not going to guarantee anything, because obviously now they're going to get in trouble. And when you're licensed in the industry, especially securities licensed people, what's going on? Dark Hills Gaming, Ara, get some. So when you're in this industry, you can't guarantee, you can't use that word guarantee, because you could get into a lot of trouble, right? And also, obviously, and people love guarantees, right? You know what I'm saying? Oh, Beach, what's up, my man? Ara, get some, buddy. Thank you for supporting the show. So when you're in this line of work, again, you got to be careful of the language that I use. That's why a lot of times people, oh, well, what would you do for me if I threw this in the market and blah, blah. And I was like, well, it depends. We got to have a conversation. I got to fill out a form. I got to send it to you. So it's not just something like, hey, investing here and have a nice life. It doesn't really work like that. And if anybody ever tells you that and they're not licensed, I run for the hills, right? So what is whole life and IUL actually are? All right. So whole life, they call it's permanent coverage, has fixed premiums. It guarantees a cash value over a period time frame. And those who sell it, they do earn high commissions, but on the flip side, it's slow growth in the early years. Why is it slow growth, folks? Well, it's because of the simple fact that in the first couple, the insurance companies that offer these products, they have to give you legally by law. It's called an illustration, and that illustration, although I do have issues with it because they are heavily overweighted with that illustration. In the first couple of years in those policies, you will see that there are zeros at the end, right? That means that in those first 2, 3, sometimes 5, that policy is not doing anything for you, right? Why? Because you're paying fees and commissions to the people that sold you that product, right? So think about it like this. Say you're paying $100 a month, right? For the first 2, 3 years, that policy is not doing anything. So that means if you multiply $100 a month times 12, that's $1,200, right? So multiply that times 3 years. So 1,200 times 3, that's 3 years. That's $3,600 that you missed out on money that could have been invested, could have been growing somewhere, doing at a much better rate of return. The other thing is that they again, meaning the insurance companies that offer those products, they say, oh, it's guaranteed 3 to 4%, right? I have yet to run into one that returns that much. Why? Because that's that those numbers are overinflated. When you get that illustration, sometimes they say up to 8%, and they may throw that in there, but it's not guaranteed, folks. And then index universal life is permanent coverage, flexible premiums. Flexible meaning that you can pay whatever it is that maybe $100 this month, maybe 50 the next. So because it's structured like that, if you don't do what we call dollar cost averaging, so it's going to underperform is the bottom line, right? So it also comes with interest credit based on the index performance. So if it's tracking a certain investment like the S&P 500, it's not guaranteed because everything fluctuates in the market. It has caps, participation rates, and the policy can underperform because, again, I don't have $100 this month, or I think I'm just gonna, since it's not a fixed payment, I'm just gonna pay $50 this month and I use the other 50 for partying, whatever. So again, it's all part of how, but they word it really good, right? And so you inside these policies, you have cost of insurance, and it rises as you age, those are that COI, that cost of insurance, is on the back end of the policy. So as you're getting older, so it'll start out like $8 a month, $5 a month, but as you're getting older, those fees, they eat into your premium. Your premium may look and stay the same, but on the back end, it's eating out of that investment account that you have. The fees come out before crediting, and those illustrations that they have to give you, they're very optimistic. So they give you best case scenario, not the real or even worst case, right? And they have long surrender periods. So if you try to punch out of it too early, you're gonna pay to get out of it. Maybe $3,000, $4,000, $5,000, whatever that may be. So that if you're gonna get out of one on that period that's $0 or it hasn't accumulated, that's the best time to get out, or even later. But even then, it's never too late, because I've helped clients get out of those things, and their money will perform that much better, right? So let's talk about another passionate topic that I love to talk about with service members is single group life insurance, and as well as when you get out, veterans group life insurance, right? When you're in the service, you have to have insurance, right? And can we agree that we are on a very, very, very high end, or I guess high risk environment? Yes, we deal with equipment that goes boom, boom. We also deal with tanks, motorized equipment, and our line of work. I mean, if we get deployed then and to no man's land, it's the likeliness that something may happen when we're out there rises by like from 0 to like woohoo a lot, right? So you paying, it used to be $400,000 when I came in. Over the last couple of years, they bumped it up to $500,000. So you're paying $30 a month. That pays for the premium on that policy. Again, your monthly payment, and that additional extra dollar is in the case of traumatic injury. So if you lose an arm, if you lose anything else, so on and so forth. So I'm just giving you wave tops on this so that way you can understand these policies, right? So it's cheap because it's group life insurance, group term life insurance, right? Same thing like if you join when you're in the private sector and you have a policy through work, they give you work life insurance through employer, and you pay $0. Yes, there isn't an exam that you have to take a blood test, and it's based on the group that are participating. The group meaning the company, the group being the service or the DoD as a whole, right? There's no investment component. That's okay. That's why it's very affordable. And it ends when you get out, when you separate from the service. SGLI is done. You have 180 days, 3 months, I believe, where you got to find your own insurance. If not, you're done. You don't have anything. And then that's when VGLI comes in, and you can take in VGLI. So you can convert from single group life insurance to veterans group life insurance, right? There's no medical underwriting. In other words, you don't have to take a blood test. You don't have to pee in a cup and fill out a questionnaire. It just transitions over. And here's the part, though, that people don't understand. So premiums increase every 5 years. I do a lot of these hypotheticals for my clients. It's very simple. And by the way, you can go to the VA website, type VGLI, and it'll give you the tables right there, depending on your age, what your situation. Same thing for SGLI. It's on that website as well. So, so your premiums increase every 5 years, which is okay because it's depending on how old you are. It'll start out, $31, whatever. It'll realign. So every 5 years, you become older. Now you're, instead of 25, you're 30 years old, so on and so forth. So as you get older, that premium starts rising. Not a big deal when you're in your 30s, but as you start getting into your 50s, 60s, oh my God. I mean, again, go on the VA website. You can see that, hey, this dude is just not talking out his rear end. He's making this stuff up. He's just trying to sell me something. And believe me, I am not, right? So for health, if you're between 28, 35, you just got out, you're separating and you're in between looking for, what works for you. VGLI is okay, right? So, but again, it's meant as a bridge. It is definitely not a retirement strategy. Please don't. Please, if you got questions, and if you're relatively healthy, again, term is the way to go. So why are these products often a bad a bad thing or a bad fit to anybody as a whole, right? So here's what people don't, or here's what they don't tell you, right? They have limited discretion. You have this limited discretionary income when you're buying into whole life, IUL, again, whole life, index universal life. Again, any of those acronym products, you're paying a lot more, but your coverage is this much, right? So you don't have discretionary income, right? Because you just got out of the service, maybe you did 1 or 2 enlistments, you're a young lieutenant, you're trying to get back in your feet, whatever the case, and again, you can't afford the payments, right? Or maybe you just got out later on in life and you need something because, again, I'll give you here just some tips of or rule of thumb of what is that you need so you can be properly protected, right? You need to be liquid. You need liquidity. You need emergency savings. You need to establish all these things that you didn't have before, and you want to eliminate debt, and you want to maximize your TSP contributions. And I get it. Look, because I speak to a lot of you out there, as well as a lot of you don't believe in 401k, and I don't know. 401k is a good strategy. TSP is a good investment strategy. Yes, 100%. You're not going to become a millionaire out of them unless you're dumping all your money, because you also have restrictions from the IRS investing in TSP, 401k, and outside of that, you also have limitations that give you benefits, again, credits through the IRS, but you're kind of boxed in on what that is. So that's why you want to have a 401k, TSP, whatever. And outside of that, have your own, maybe a traditional individual retirement account or a Roth account, which gives you, again, essentially the money's tax-free because it's already been taxed. But we'll talk, I don't want to get too deep in this because then this could be an entire course right here, right? So again, you want something that's low cost, you want to invest like the TSP or something outside that gives you market exposure. It gives you long-term compounding, right? There's no insurance wrapper around this thing. Oh, hey, this is how the rich got richer. What? Look, listen. That's the one thing is that. So when they sell these things like IULs, they're capped. They have long break-even times. They're complex as hell. I mean, and they love to just confuse the living heck out of you, right? And so it is not the best. And by the way, look, the Rockefeller, here's the other favorite line that they like to use. Oh, look, this is how the Rockefellers got rich, and this is how they invested. I'm here to tell you that those people were already rich, right? IULs weren't developed until later on in life. Did they have things to protect themselves, their family wealth, and their estate? 100%. If I'm stupid rich, of course I'm going to protect my money, and of course I want to leave a legacy for my kids, right? So did they have those people? Yes. Did they have lawyers, and did they have things implemented in addition to other strategies to keep growing their wealth? 100%. Yes, they did. Did they have an index universal life policy? No, that is complete BS. So again, don't get bought into all these things, because that animal does not. You don't mix insurance and investing, folks. It's what I'm trying to get at. What I'm getting, you buy term policy and invest the difference. It's simple math, right? So if this last 28 minutes that we're talking about, if I'm here to tell you how is it that I'm going to make this thing happen? Well, you buy term. The math is super simple, right? You buy affordable low-term coverage, again, 20 to 30 years, depending on your situation. Why term? Term is super affordable. And then you get like a ton of coverage, folks. Ton of coverage. Hey, this isn't a sales pitch. Yes, it is what I do, but I'm here to tell you, whether you do it through me or anybody out there, friends don't let friends get into IUL's whole life and none of those things. Okay? It doesn't add up. And look, a simple $100. If you're in your 20s, maybe 25 years old, and you go out there and you put $100 into a Roth IRA, maybe this is not a recommendation. I got to throw a disclaimer out there. And then maybe on the S&P and some other things out there, I'm telling you that money is going to compound grow, and it's going to outperform any IUL policies out there whole life and any of that stuff. It's good. Numbers don't lie. If you again, if you're curious and you want me to just show you, again, there are tools. There's a TikTok that I did on a financial compounding calculator that's out there. That's free. So again, you can fact check me all you want, right? So you invest the difference consistently, what we call dollar cost averaging, $100 a month steadily for a time period. Yes, does the market fluctuate? Yes, it does. Is the sky going to fall? No, it isn't. Do banks ever lose? No, they don't. So what I'm trying to get at, folks, is that regardless of what the market does, the market is going to keep doing it. However, you will see that it's still going to outperform one of these policies. Why? Because those policies, they give you much lower rates. So what makes the difference? Getting 8 to 12%, bypassing the middle person, you keeping all the gains, or putting yourself in jail. You're going to fund this vehicle yourself. They're going to give you what they state 3 to 4%, which it is, and it's 2 to 3 in reality. They're going to invest in mutual funds or something like that. Maybe the S&P, get all the gains and give you all the crumbs. That's the way these things work. So why would you want to do that when, again, you're bypassing the middle person, working with somebody, maybe like me, again, and it's just, you're going to be much, much better off. So complexity usually hides the cost, and simplicity usually builds wealth. I mean, think about that, right? So what will make sense, folks? Getting locked in and then just putting your money in something that doesn't really make sense. So, I mean, look, and I'm not the only guy talking about this. There's plenty of other folks out there on social media that are giving the right information. So it's not just my the company that I represent on the side, and that's not. And I'm not going to give it. I mean, you guys can know. You can follow me on social media, but it's neither here nor there. I wouldn't put another brother and sister on one of those other products. Why? Because the math doesn't add up, and as you get older, it just the premiums go crazy. And look, we're the only company that say, hey, look, by the time you're 65, if your kids are out of the house and your mortgage is almost paid off, or it's already paid off, do you really need life insurance? Have you grown your wealth more than you needed, and you can cover your own funeral costs? You really don't need life insurance by that time. Okay, your kids can grow their own money; they can get their own life policies. If they're already married and whatever. So the best thing is getting life. It's never too late to get term life insurance. And despite of whatever you got going on, because I work with a lot of veterans who you may or may not have things residual from the service. That's okay. It's not a showstopper. Okay. Any insurance company is going to look into your medical past. I'm here to tell you that they're going to look because they're covering a risk, right? Just like they look in when you're driving, when you're going to insure your car, they're going to look into your driving record. Why? To see how many tickets, because you are a risk. And if the more tickets you have, the more you're gonna have to pay to get that coverage, right? So same thing here. However, if you're in relatively good health, then your payments are not going to be that much. Again, financially it makes sense having term. And I'll leave you with this. What happens Pacho, what happens at the end of the payment or at the end of the policy? What happens? Well, if you still need life insurance, you can renew your policy. Your premiums are going to go up. Obviously, let's say, you start out when you're 25, you have a 30-year policy. Now you're 55. Well, you're older. However, if you're relatively healthy, your payments are, actually through our product, you'd have to prove that you're medically fit because you're already a client. That means that there's no exam, there's none of that stuff. So if your policy was $30 a month, it may go up 3 times that, maybe $90. But if you get your coverage is maybe $250,000 coverage, $250,000. I mean, you're still paying $90 when you're in your late 50s, 60s. You're paying that amount. I mean, Jesus Christ. I mean, why not? You know what I'm saying? So, however, most companies, they're going to have you prove that you're medically fit, because as you get older, age doesn't come by itself. It brings a lot of other things. So, just some things to think about. And think about this too. There's a lot of nowadays, I mean, shootings and those things are pretty prevalent. They do happen. It just happened at a hockey game as well. Those are deemed now acts of terrorism, which, whether they're in home or homebound or outside or anywhere, anything can be deemed now an act of those are exclusions, and insurance companies can and will deny that claim. Only 2 companies that still don't. One is us, Primerica, and the other is USAA. So, and during 9/11, I'll use 9/11 as an example. We paid out every claim. We didn't contest it. Nothing. There were several life insurance policies that denied those claims because those were acts of terrorism. So, think about that. So, what am I saying at the end of this whole entire conversation, folks? Do not buy IULs. Do not buy whole life insurance. None of that stuff. If you got questions, please hit me up. We can have a 10, 15-minute conversation. I'll give you all the information so that, if it's not a good fit at the moment, hey, I get it. Shit, that's life, whatever. But you at least have that information so that when you're ready to make that decision or that transition, you'll think of me, and I can guide you on this. But don't get caught on that hype. If it sounds too good to be true, it probably is. Come on, man. You were in the military. Hey, let me get a working party. It's just for something really fun. And it's like, don't volunteer for anything, right? So, hey, and before I go, if you've been ruminating, you've been dealing with some really hard stuff, you need somebody to talk to, hit me up on the show. We can have a private conversation. If you need help, I can connect you with a lot of good people out there. So, but don't do anything that we just can't bring you back from. We don't need another brother and sister committing suicide and losing you as one of the good ones. Okay, so let me talk you off the ledge, and let's get you the right help that you need. All right. So, well, folks, I think that this is a good place to end. I think I bumped my gums all this time. I got super excited. I think my accent even came out a couple of times, but that's okay. So, with that being said, hey, thanks so much for watching. I really appreciate you. Follow me on all my other social platforms. All right. So let's end right here. Aistamas, Daisuki. See you next week, everybody. Ara, get